Hello and welcome to Gold and Silver Assets. It's Sunday the 29th of March 2020. Well, what a difference a week makes. When I spoke to you last week, things were relatively normal where I am. However, since then a lot has changed. So basically we were given 48 hours notice that the whole country was going to go into lockdown. And so a lot of people were rushing around trying to get all their jobs done at the last minute. And that was required because all non-essential services were going to be shut down, and that's exactly what happened. Now, I managed to get most of what I needed to get done sorted. However, one thing that completely slipped my mind, I didn't even think about doing it, was actually getting a haircut. And I guess depending on how long this goes on for, there's going to be a lot of people out there with strange hairstyles and wonky cuts that they've tried to do themselves. Now, all these events no doubt will affect the precious metals markets. And I called up a local bullion dealer to have a chat about what's going on with them. And I came away with two interesting bits of information from our brief conversation. So the first thing is that he was obviously rushed off his feet and he couldn't talk for very long, and he was almost out of breath. And secondly, it sounded like it was getting increasingly difficult to get any stocks, and as well as that, the lead times for delivery were steadily increasing from 2 weeks, and that had increased to 8 weeks. And I know that certainly the Perth Mint is very limited in their supplies. They've stopped supplying a lot of products. The last I heard, they were basically just concentrating on the 1 ounce coins, particularly the kangaroos. Thanks to the reports from our viewers as well in last week's video, who actually reported things like premiums and availability. And basically the overall gist of that was that it's getting very difficult to get hold of gold, and definitely almost impossible to get hold of silver. And the other thing is that premiums can be quite large at times. And this really highlights the great paradox in the gold market. So if we just look at the last week or two alone, demand has exploded, with some dealers reporting 7 to 10 times the usual demand. But also I think supply has and will continue to temporarily diminish, and that's due to a combination of closures of mines, as well as closures of refineries. So we know that the Swiss refinery has closed, as well as closures of national mints as well. So theoretically, this combination of huge demand and diminished supply would suggest a skyrocketing gold price. But paradoxically, although price has gone up, it hasn't exactly skyrocketed, and the chances are the prices in terms of the spot price may actually even go down, which is a very strange thing to see. And this is really because there's such a disconnect between the paper and physical markets. So here we have gold priced in US dollars on the monthly scale. And I just want to reiterate that the charts I'm going to be showing you do not reflect what's going on in the physical markets. And I wonder if we're getting close to a breakdown in the paper markets. So if you are trading paper vehicles, you've got to really keep your wits about you. Don't think that you can put your money in there and leave it for months, and certainly not years. Things can change very quickly. We're in a very unstable environment, and you just don't want to be caught unawares with this. And in previous videos, I did speak about the times in the past when physical gold shortages had occurred. So in particular, we had shortages here in 2008. There were also shortages in this dip here in 2013, as well as in this low here in 2016. And we also now having the same situation here, but this looks quite different. In these previous times, price had dropped substantially in all of these occasions, whereas currently we're at a 7-year high. And so this is very bullish for gold, I think. So looking at gold in US dollars on the daily scale, we've seen a huge amount of volatility in the last couple of weeks, more than we've seen in a long time. So the first thing that I want to point out is that we didn't actually make a lower low. So price dropped to 1450 initially, but it didn't go lower than its previous dip. So we can still say that we are in a uptrend. Now the thing to notice here is that price seems to be oscillating around this channel line. And so we've got a couple of possibilities here, and it's very difficult to know what's going on with this market. Strange things can occur, and all we can really do is look at the levels, but I don't think it's one that's easy to trade at all. So basically, if we can break above and close above, let's say 1650 and particularly 1675, then I think there's a fair chance that price is going to shoot up and be heading towards the 1800 US dollar level. However, if price fails to break this overhead resistance and starts turning around, then we're back in the channel and we're back with those previous channel targets that we've spoken about multiple times before. So that's 1520. I think if we go below 1520, then we're going to be talking about a lower low. I'm getting less and less confident that we're going to actually hit the bottom of this channel line just because of the way the market's behaving. It's just really strange, this price action, and it's almost as if we've got a Mexican standoff between the commercials and speculators in the paper markets, and it's very difficult to know who's going to win just because we're in such an unstable time in the markets at the moment. Looking more closely, we'll look at gold in US dollars on the 4-hourly scale. And in the last video, we spoke about this triangular shaped structure that I said predicted a strong move ahead. Now, I didn't know which direction that move was going to be. I said it was about 50-50. It could be either way. My feeling was initially that it would be a down move because it could have been a continuation of the preceding trend. However, it actually broke to the upside, and we did indeed get a very strong move with price going up over $100. And now, since then, we've got the price which seems to be consolidating in this area. So what's going on here? Again, I think we're going to get another strong move coming up. The question is this a flag, in which case we could get another shoot up there, or is this channel line going to represent tough resistance for price to break, in which case a breakdown would suggest a move back down to around the 1520 level? So what's going to determine this? Well, the levels we need to look for are a break below 1600 US dollars or a break above 1645, 1650, let's say. Let's move on to silver in US dollars on the weekly scale. And silver continues to respect those trend lines that I've drawn. And if you look at my videos from the last couple of weeks, you'll see that how I came to draw these lines. And we can see that in the last couple of weeks, price dropped through that red line and then bounced off the lower channel line and then bounced back up. And that red line is now forming overhead resistance. I just find it really amazing how perfectly these lines are acting as support and resistance. Let's move on to look more closely at silver, this time on the 4-hourly scale. And here we can see how the lower channel line has been retested multiple times. Price then bounced up, and now it's testing that overhead resistance multiple times. So the question is where we're going to go from here. I think if we can break this red channel line, which is at around the 1450 level, and break and close above that, then we'd be looking at more upside targets. But if it fails to do that, then we may well get another retest of that lower channel line. Whether we break that channel line, I don't know. I don't think it's going to happen, but there's no certainties, who knows. And let's move on to the GDX chart on the weekly scale. And as we can see, price has been in this trading range within this horizontal channel for over 7 years now. The top of the channel has been tested a few times, and each time it's failed to close this gap here that was formed in 2013. The lower end of the channel has only been tested on one occasion really at this time, and my view is that I think we're likely to test that again, and there's a whole host of fundamental reasons why I think that might happen. Let's move on to the GDX on the daily scale. And we've seen a huge amount of volatility in the minors here. This is crazy price action. We seem to have respected this sloping overhead resistance line, and we have a gap here that still needs to be closed, and I think it will get closed quite reasonably quickly. Now, I'm not particularly optimistic in the miners in the short term, and one of the reasons is that, of course, the mining stocks are still stocks and the stock market remains weak and in a strong downtrend, and usually the miners get dragged down along with it, and I don't think the current situation is any exception here. The other thing is that there are likely to be many temporary mine closures. There's already been a lot of closures around the world, either voluntary or enforced by governments. And so the other thing to remember is that as mines do close temporarily, they still have to cover care and maintenance, which does cost money. And so this is where having a really healthy balance sheet is going to be absolutely crucial. So if you do dive in at some point, make sure you have strong, good quality miners. No doubt there's going to be lots of bargains to be had, but just be careful in the current environment. Well, that's it for this week. I hope everything's well with you, and we'll see you again next week. Bye.